We're following shares of Quebec-based Couche-Tard. The company released first quarter results in line with analyst estimates. For more on this, let's bring in Grant White. He's the portfolio manager at IA Private Wealth. Thanks for joining us today.
Thanks for having me.
So broadly in line with estimates, strong in-store sales, but a miss on revenue. So what's your read on these results?
I mean, I think this is a nice turning point for Couche-Tard, actually. I mean, it's been a somewhat of a challenging year over the last 12 months for the company, and especially with all the noise around the 7 and I deal, and that obviously deal getting pulled, somewhere over the summer. So I where we're at with Couche-Tard is we have it as a buy. I really like the company. I think that this distraction from the acquisition of 7-Eleven is now over with, and now the company can now start focusing again on the things that they're so successful at and looking at new opportunities for growth. So, I'm not too bothered by any sort of slight miss on this quarterly report, Morel. I mean, I think that this company is so well managed, and now that the fact that they can actually focus again on their core fundamentals, things are looking bright for this company once again. So I'm excited to see where they can go from here, and the market's rewarding it today. Did
you feel like the failed bid for 7-Eleven did affect the company's stock?
Oh, definitely. I mean, I think that, what we saw over the last year was a direct result of that, where, the company, it was a hit, it was a miss, it was a hit, it was a miss. And so we were trying to figure out, everybody's trying to figure out what's actually going to happen with this deal in the end. And so now that we have more certainty around that, it opens the doors for other opportunities, whether it be, share buyback opportunities or new acquisitions. The team there can now focus again on looking at new opportunities that they can pull off. I mean, this would have been a great deal, I think. I liked the deal from the get-go if they could get it done. But at the end of the day, not all good deals, or the best deals are the ones you don't do, I should say. And so I think that the company's in really good shape going forward and has a lot of cash to deal with now.
You say the company still has international runway. Do you see specific possibilities for them?
Yeah, I mean, nothing's been announced yet, obviously, but the company's so good at finding these diamonds in the rough, and so I think that this team is going to be hard at work. They're probably grateful to have the extra time to actually look at new opportunities at this point. So yeah, absolutely. I mean, the goal hasn't changed here, and so the company now just has more time to find it, and they're going to be looking at maybe not as big of a deal, because that 7-Eleven deal was massive, but now they can start chipping away at other international expansion deals that are going to really help out the core fundamentals of the company as well going forward. Again, we like this company where it's at, but part of the reason we like them so much is their growth strategy and their execution ability.
Let's get to Alphabet, if you don't mind, because the stock obviously moving up today. How will it broadly benefit from the U.S. antitrust decision?
Alphabet is one of my favorite companies. We've owned it for a long, long time. Admittedly, I'm a bit surprised at how this deal played out, or this ruling played out, I should say. And so pleasantly surprised, obviously. How this is going to play out in the short term, first and foremost, this is a good deal for Alphabet. They get a little bit of status quo, they get a little bit of comfort, and as a shareholder, it gives us a little bit of a runway here. I really like the reasoning behind the ruling, given that we are seeing AI models and large language models coming up in the search space, and that's going to continue on. And obviously, Alphabet's going to participate in that, but so are other companies. So this isn't going to be a one-horse race the way that search has been for decades now. And so it's a really good deal on both fronts, because Alphabet gets the runway over the next few years, whatever that happens to be. But at the same time, with the data usage that all the other companies can now tap into, I mean, Google has so much data and so much valuable data. This is just going to do nothing but improve AI models in general. And so I'm very optimistic about Alphabet going forward, because I think this is great. It helps them out in the short term. But at the same time, I'm very optimistic about the other models, and now with their ability to use this data as well.
Okay, so what are Google's opportunities in the AI space?
Yeah, I mean, they're one of the big players, right? I mean, especially with Gemini and all the other models that they're running. Alphabet has as good a chance of being the leader in the space as anybody. The other thing that Alphabet has a real advantage on is they're not just a model that you type into and you use in the software space. but they have the hardware that's literally on the streets. It's in your pockets as well. And so they have a real good practical use of getting AI in people's hands that they can use into everyday life. And they have a long history of doing that through whether it's Alphabet or Android phone systems or you name it. And so, and especially with Waymo as well, having the cars on the streets, this is a really, I'd say they have as good of an opportunity to lead in this space. Maybe you might call it winning in AI as any other company out there. They're going to be a player no matter what. And really the only fear we might have had is that they get tripped up by all these antitrust rules and rulings in the meantime. So without that fear, it clears the runway for Alphabet going forward.
But they are restricted from certain exclusive partnerships. So how will it be restricted, or how do you see them being restricted moving forward? And how much of a hit on Google could that be?
I'm not overly concerned about it. I mean, I think like some of their major partnerships today are still intact. And so, the company still is positioned well in the short term. And frankly, I don't think that they're going to be as reliant on those partnerships going forward. And so I think that Alphabet is still really well placed. Like I said, I mean, this really alleviates the short-term concerns we had for Alphabet that might have impacted them over the next few years. But it's done nothing to, we're not concerned about any of the ruling as it relates to their long-term success as long as they continue to execute. I mean, that's the key, right? For any of these companies, can they execute? We believe Alphabet has a good track record of that, and they've got all the resources they need to make this happen. And so I think they'll just be less reliant on those partnerships going forward. And like I said, they're very well positioned here.
What do you make of this run by the TSX? It's September. We typically think of it as a sort of more volatile time. Stocks get hit, and we're seeing record highs, even an intraday high today. Are you looking for a correction?
I mean, I think we're always looking for a correction as a buying opportunity. I think that it's natural for people to think that as we're hitting record highs that, we must have a pullback at some point soon. I think that the reality, like we've seen the market lifted by a couple of things, right? I mean, gold prices have really helped, and more recently, financial strength has really helped lift the TSX as well. I'm not overly concerned on a short-term basis because, I mean, frankly, we could see a correction. I would look at that more as a buying opportunity because I'm very optimistic about the next decade for Canada. I mean, if we can execute on so many areas, including energy and getting more of our energy out to the rest of the world, then Canada is set up very, very well for success here. So I would say, it's possible that we get a short-term pullback, but I do think that there's a lot of tailwinds that could push momentum higher here as well. And on the long-term basis, Canada is looking very well positioned if we execute properly. And that's a big if, but if we do that, then I think Canada's in for a really good long run here. The next decade looks very bright. The other thing I'm optimistic about is we're seeing a lot more consistency in company earnings here. And I think that, in the absence of like big swings in company earnings, we can get a lot of good consistency on the market itself. And the breadth of the market could also help to lift things higher still in the short term as well. But overall, long term, I feel very optimistic for Canada as long as we execute.
Got it. Grant White, appreciate you joining us. Grant, Portfolio Manager, IA Private Wealth.